CPI, CPI. Yeah, CPI, less than 15. All right, you guys ready to get going? All right, welcome to Forex.today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Hang on, I was doing 6 things at once. Here we go. I got to move this page over. Hang on, I'm trying, baby, I'm trying. Oh, got to minimize that. There I am. All right, there we go. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. CPI, baby. Please answer the poll if you think higher, lower, or as expected. We can do some pre-news analysis. Then once the news comes out, we'll look at how the market responds, and then we will go through our regular routine of reviewing euro dollar, the S&P 500, the 10-year T-note, gold, Bitcoin, that kind of thing. What do you stink? Smell like a plan? Yeah, and then the stock market opens at 9:30. So we have just about an hour. So we will go into tradars.com, radars for traders, and we will get ready for this news event. But please answer the poll. That would be appreciated. Boom, 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 boom. So we already did this at Traders. We already did this at Tradars. We already did this at Tradars. Croatia inflation unrevised at 3.7%. Okay. This is where we're going to do the news. We have both Canada and the United States coming out at the same time. Okay. Very good. 10 minutes away, so we'll get this news live. But one of the things we've already done this morning at traders.com, again, just become a subscriber and you'll already be prepared. So I'm not going to take you through the whole routine, but we do know in 10 minutes and 11 seconds that Canadian inflation does move the market. So we have to pick one or the other. So we're going to pick this one. And we've already looked at past performance and separated everything. If it comes out less than expected, is there a scalp on dollar pairs? And if so, what direction? If it comes out greater than expected, is there a scalp on the dollar pairs? And if so, in what direction? And if it comes out as expected, is there a scalp? And if so, in what direction? And so, like, you can go through any scenario, and then you can pick any pair, and then you can see what's happened in the past. So not only can you get a good, a percentage of, what percentage of time did it go up under that circumstance? Well, 75% of the time. But then you can actually pull up the charts and see, well, did it go up a little or did it go up a lot? Did it go up immediately or did it wait for the stock market to open? See, we've already done all of this. So, hey, YouTubers, you should actually become a subscriber to traders.com so you'd have that kind of performance coaching every day, huh? But let's see what you guys think, and then we'll just quickly take a look. Okay, higher than expected wins, so you just go greater than expected. Let's just pick euro dollar. Okay, here's our trade plan. Okay, and then you say, okay, so you think greater than expected. So if greater than expected, what happened in the past? Okay, here's your trade plan if you believe it's going to be greater. In May, it was greater, and it moved sideways to the stock market open, and then it went up. In March, it didn't do much at all. Yeah, 2 hours later, it did close up, but it went up, and then the stock market brought it down, and you'd have to go further out. Okay? And that's that. Yeah. So in that case, it's pretty mediocre. Also notice, even though that's CAD news, there ain't no CAD. Now you're like, well, either we forgot to put the data there, not likely. So then why does USD CAD not show up here? Well, it either had no volatility, or with the volatility that it did have, there was no reliable, repeatable pattern. So if it was close to 50%, then it's useless. So guess what? That's likely the scenario. So if you think it's going to be greater than expected, 2/3 of the time is what we got on direction. So what you could have done is, we looked at euro dollar, and even though it's 66% of the time we had that direction, the setups were mediocre. One was okay, but delayed, and the other one was not very good at all. Notice Aussie goes the other way. Okay. Is pound a better trade? I don't know. Let's take a look. Okay. And it does kind of what the euro dollar does. Well, that makes kind of sense. Kind of does, right? But now you can actually now you can analyze it, not guess. Notice Kiwi also tends to go, like Aussie, tends to go the opposite as euro and pound under that circumstance. Is that good information to know? That normally you might say, well, you'd scalp all of these long, or at least you normally would think, buy this, buy this, buy this, buy this. Well, quantitatively, that would not be correct. I would assume that that's what would happen. Yeah, I'm with you. That would make total sense. Quantitatively, that's not actually what happened. Good to know? Of course it's good to know. Gee whiz, huh? But we can also take a look at our CPI data. Where are we in the world of inflation? How are we doing? Loading, loading, loading. What do you think of that? You're like, oh my God. Well, that's the world as we know it. Although, did this die? It's died? June 25. No, no, it goes. No, that's recent. That's the most recent. May, June. Maybe I can zoom in a little bit. Do, 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 do. June. Yeah, for some reason we don't have the most on them, but gives you an idea of where we are. And then need to work on that. Do we have? What's the most recent? Yeah, so it's July and we're getting the June number. Okay, no, that's right. At 2.36, that's right. So since the beginning here, it seems like inflation has come down 6.5 all the way down. So down's good. Down means the Fed can cut. Now, the market, and as well as you, because you're included in the market, believe this will go up a bit. Not above 3.0, most likely, but up a bit. And I would imagine your logic is that tariffs didn't lower inflation. So if you had to guess, it would have to raise inflation, right? Well, that makes sense to me. So we'll get the data. But I think everybody thinks that too. So the bigger news is if it's less than expected, that will be very significant news because I think most people, and in this case, I think 58% of people think it'll be higher, and another 23% expect it to be as expected. And by the way, as expected may be higher. So there's as expected could be higher, and then higher than expected is higher than the higher expectation. So we're looking at 83% of people think it'll go up. So boy, wouldn't it be interesting if it was lower? That's not a prediction, but wouldn't that be interesting? Okay. So we're only a couple of minutes away to do the CPI. Croatia inflation unrevised at 3.7%. US CPI will kickstart the US trading day. The US dollar is mostly lower to start the day. OPEC says world economy may do better in second half of year.
Crypto today, Bitcoin, Ethereum, XRP trim gains amid declining ETF inflows and profit taking.
Pi Network price forecast. PI test crucial support level amid bullish RSI divergence.
FTSE 100 moving in tight range.
US dollar on cautious footing ahead of CPI data. Gold steadies near $3,350 as markets eye US CPI and tariff-related inflation risks. Oil prices dip as traders weigh Trump's Russia sanctions delay.
Traders
Chinese
weigh.
GDP.
US CPI data set to show inflation accelerated in June as effects from tariffs emerge.
1 minute. 1 minute. It's actually a little more than that. 1 minute until the countdown. There's the countdown. 58 seconds. All right. Year over year, 1.9 was 1.7. See, so the expected is higher than previous. And then most of you think it'll be higher than than previous. So you're looking at 2.0, I guess. 30 seconds. Shields up, red alert. 14 seconds. All right, here it comes. Wait for it. Wait for it. We're watching the Canadian numbers only because they're more reliable than the U.S. ones. But you got to do both. 1.9 as expected. So we have the data for that. So now you could just go over to the news radar, pull up as expected, and see what's happened in the past. If I recall, you get non-directional. It's not about USD strengthening or weakening. I think if I remember correctly, Aussie and Kiwi were down and Euro and Pound were up, which is gobbledygook. So there might be more risk than opportunity, huh? Yeah. Cray. I don't know if this will work. Never did this before, but I guess so. Cool. Neato. It's the end of the world as we know it. And I feel fly. Pretty fly for a white guy. All right. You guys happy? Huh? You guys happy? Yeah, this really bugs me. This really bugs me. All right, let's take a look at what happened in the United States of America. And inflation 2.7. So everybody nailed it. Okay, everybody nailed it. So we'll post that. Okay, cool. Yeah, all right. Core 2.0. Yeah, that makes sense. That's where we've been, but they thought 3. Okay. All right. Cool. In 17 hours and 27 minutes, we'll go through CPI with the UK. Just so you know. So this is nice to have a real-time live calendar, isn't it? Oh, for sure. Cool. What amazing tools, huh? Yeah. What amazing tools. So our new number, I want to make sure I got this in my brain. Okay. We are now at 2.7. See, I gotta know these things. I just gotta. Okay. So it says previous 2.4, but I also know that that's rounded up. So I can say, well, it's actually closer to 2.35. But anyways, now it's 2.7. Okay, good. So I have to know that. I have to memorize that. And how's that compared to Canada? Well, Canada is below 2. We're at 2.7. See, I'm trying to memorize it. Breaking U.S. headline CPI rose by 2.7% year over year in June. Canada Consumer Price Index, CORE, MOM, increased to 0.3% in June from previous 0.2%.
United States Consumer Price Index NSA, MOM, came in at 322,561, above expectations 322.5 in June.
Canada Consumer Price Index year over year, in line with expectations 1.9% in June.
Canada Consumer Price Index, MOM, meets forecasts 0.1% in June. Canada Bank of Canada, Consumer Price Index Core, year over year, climbed from previous 2.5% to 2.7% in June. Canada June CPI, plus 1.9%, YY vs plus 1.9% expected.
I laugh because
U.S. dollar uptrends forming. BofA Securities.
I laugh because
Markets wait for U.S. CPI.
Can I speak now? Yeah, I laugh because all of that just came out. So at the 15 and at the 45 of every hour, what happens is you get an update and it reads all the headlines to just keep you focused on what's been happening recently. So twice an hour. That's not what just happened. It's just that we read about the Canadian and U.S. inflation reports. 1, 2, 3, 4, 5, 6, 7, 7 different sites, or at least 7 different articles mentioned the new data. And so imagine while you were trading, you heard it. That's the whole idea of a squawk box. So now while you're analyzing this, and and I'm worried about this price right here, so I could be watching this chart and I still get updated with what's going on. Breaking U.S. headline CPI rose by 2.7% year over year in June. Okay, isn't that neat? And I never have to take my eyes off the prize. So anyways, I'm very worried about this price. I'm very worried about this price. I was 2 hours ago and I still am. I was worried about it yesterday. And we've hit it a third time now and once again stopped. Wowzer. So No says, hey, so is it good? So I think what you mean is the 2.7 good or bad? Well, don't think good or bad. It is what it is. But how does it impact monetary policy in the United States? Well, if inflation's rising, the Fed is less likely to cut. And so now you have to say, does that push the stock market up or does it push the stock market down? Much different rationale. So let's go through our routine, everybody. That was our CPI. Let's do a quick macro. Macro. Okay. Macro. Talking about macro. You ready? What's going on in the world of macro? Let's analyze everything together. Boom! Hey now. Let me zoom in here. Zoomy. It's one way to do the zoom. All right. What do you see? All right. Right now this is going to change when the markets open in about an hour, but this is where we are currently. Yields went up, and oh, look at that. Oil was at 66, so it's up a little bit on that news. So, okay. All right. I thought this would be coming down today, so I'm going to have to take a look at that. So what I said earlier is this felt like this would happen here. Craig says sell the Russell. That makes a ton of sense, eh? So what Craig is pointing out is if the Fed's not going to cut in July, then that hurts small businesses the most. And he would be correct. I would agree with that logic. Take a look at selling Russell. That could be very disappointing. Maybe not to the Dow, and NASDAQ might be up based on the NVIDIA news this morning. The Trump administration allowed NVIDIA to sell NVIDIA chips to China. And that also might be a leading indicator that the United States and China are close to a trade deal. And this is an olive branch. So that's a lot of good news for NASDAQ. But CPI going up in the United States could be bad news, in particular for Russell, if it means the Fed doesn't cut. But then again, everybody expects it. Everybody expected it to be up, right? 83 of people expected it to be higher than last time. So it's not a shocker. In fact, most people thought it would be even higher than that. So maybe it's not, so maybe it doesn't change that much, Craig. But we got to be careful. Now, would you pull up the Russell and be ready, willing, and able to take it down if that's what's happening? Sure. But because of its sort of, yes, it was higher, but most people expected it to be even higher than that, then it's lower than most people's high expectations. So anyways, I'm just saying be careful. The logic makes sense, but be careful, right? Yeah. So anyways, gold, S&P, dollar all flat, and Bitcoin getting crushed. We're at 122, maybe 123, and now we're at 117. Oh my goodness. So I missed it last week, and now, I mean, here's the thing. I think I owned it at roughly 111, 112, and I bailed on it, and 5 hours later, it was at 120. I'm like, you son of a... And then I went to 122, 123, and I'm like, oh no. And now it's all the way back down to 117. I'm like, okay. Because I don't know if it went to 123, would I still be in it? Yeah, I don't know. Whatever. It's complicated. So I'm going to skip the risk gauges and go to the scatter plot, take Bitcoin out, and see how the market is behaving right now. Okay. Everything to the right is expected to be up. Everything to the left is expected to be down. So these ones in the upper quadrant are bullish and unexpected. Everything in the bottom right quadrant is bearish and unexpected. So it seems like most things are doing what they should be doing based on quantitative analysis of macroeconomic data that is then compared to the other. So it's comparative analysis of macroeconomic data. So we'll call it longer term. The longer term analysis is KiwiCAD should be up, and it is. Pound Kiwi should be down, and it is. Okay, cool. That's how that works. So we can do the stock market, and this is now, not in general. This is now, right now. The Russell currently is up 0.67% with a positive score of 5. Okay, now, as Craig points out, this could be too high. This might have been people betting on one thing, and then the outcome is down. Don Pablo says you're overthinking it, and I know what you're talking about when I was saying it's up but less up. Yeah, you're probably right, but what I was saying is I wouldn't, with conviction, pick a direction. So maybe the bias doesn't change as much, but if Russell was collapsing, okay, I would have to believe that I understand why, but I wouldn't gamble that it will or that it must. Because look, 83% of the market expected it to be higher than last month. And it was higher than last month. So how surprising is it? And of the 83%, 58% felt like it would have been even higher than it came out. So really, it's a bit disappointing. I'm just pointing out that we all have to analyze what we think of it. So as Nono said, is it good or is it bad? Well, I don't know. What do you think? Okay. But I wouldn't, I think where amateurs go, and Don, you've been around a long time. So, I think we've seen that an amateur will say up, bad, sell. Or actually, they would probably know up is good, means buy. And down, lower is bad, bad means sell. That kind of thing, right? And you're like, no, that's not necessarily or even often the case. So I'd rather over-explain it for someone to then think about what they think. Yeah. Sorry. Now, isolating the U.S. dollar, dollar weak, yen weaker, dollar weak, dollar weak, dollar weak, dollar weak. So dollar is weak, yen is weaker. Start by buying yens, and right. Well, I should say selling. Start by selling yen, and once you're in everything you want to be in, then roll over and sell the dollar. That's what we're thinking. Now, how do you decide which ones? Well, here's the interesting thing. This is down, and it's expected to be down. Okay? This is up, and this is up. All of those are expected to be up. So this is interesting. This is interesting. They're up, and they're not necessarily supposed to. Wait, did I get this? Bullish unexpected. Yeah. And then this is supposed to be up, and it's not. So that's also interesting. This is expected. You should already be on these trades. Yeah. And this one is odd. You might have skipped it. This one's odd. You might have skipped it. This one's odd. Now, why would you have skipped it? Well, this has a negative score. Why would you be buying something with a negative score? This has a negative score. Why would you be buying something with a negative score? You're like, Wayne, because it's going up, there's green candles. Well, that doesn't make any sense. Okay? You're chasing. Okay? Okay. Would you be selling this even though it's down today? No, it's expected to be up. It should be up here. And these are supposed to be down here. So they're tales of caution. They're cautionary tales. What's going on there? That's the questioning. Yeah, that's the process that you should have. Okay. And so we're not going to do that. We're not going to do that. We're not going to do seasonality. And we're not going to go through the scorecards. I've already done that with the team. If you like this data and you would like some performance coaching, all of it is included at traderus.com. All of it. All of this can be yours, and no one gets hurt. All right, let's go. Let's skip the fundamentals now. Let's just go straight to the technical setup. What do you guys think of euro dollar, up, down, or sideways? It'll help you analyze the charts. If you don't know up, down, or sideways without even looking at the charts, success will elude you because you don't know what you want to do. You think you're going to get clarity? You think the charts are going to give you clarity if you don't know what to do? No. You don't go shopping while you're hungry. Oh, look at that. That looks good. No, put that back. All right, euro dollar. 3, 2, 1, let's go. Looking at 5 different time frames, looking for 20 different scenarios. It's bullish with a threat. Next. Bitcoin. What do you think? Looking at 5 different time frames for 20 different patterns. Bitcoin, bullish with an opportunities. Buy a dip. 10-year T-note. 10-year T-note. What do you think? 10-year T-note, where's the opportunities? None. Niet. Nada. Good. What do you think about gold? Huh? Is it good, bad, or ugly? Up, down, or sideways? Reversing, trending, what's going on? Well, let's look at 5 time frames. And what we see is on the daily, pennant emerging. I'm going to be cautious on that. And rising wedge, well, in this scenario, you can buy the moving average. Let me show you here on the 4-hour. Your choices are this. Okay, your choices, this is how you read this chart. And by the way, if you don't know how to read the chart, the cheat sheet is in the description below the video. You just download the cheat sheet, and I promise you it doesn't put you into a sales funnel. It just gives you the download. Okay, so you buy the moving average or you buy the bottom of the pattern. That's it. And that's on a 4-hour chart. And that's how I would look at gold if I was me. S&P 500, what's going on in the world? Well, we've had some interesting news this morning. JP Morgan has reported. Wells Fargo has reported. I've looked at the net interest income on both of those, as well as profit margins. Great. NVIDIA got a deal with the Trump administration, allowing them to sell some of their chips to China. That's great. Maybe that leads to a trade deal. That's great. So what in the world is the opportunity if we look at the 15-minute chart, the 30-minute chart, the hourly chart, the 4-hour chart, and the daily? You know what? This is it. So let me zoom in. That's all there is out of all of everything I just said. So how do we play this? Talk to me, Goose. Well, you either buy it here or you buy it here. So you figure out that price. So I'll say as we get closer to 62 or right here at 63, that becomes a buy zone. Plan A, plan B, done. I just analyzed the 15-minute, the 30-minute, the hourly, the 4-hour, and the daily. I got 2 trading plans. Both are bullish. Can't sell it. Done. Now, my chart says be careful here. This isn't my chart. This is simply doing pattern recognition. This is my analyst saying, hey, those are the prices. So now I go here. This is my 1-hour chart. So we were just looking at the 4-hour chart. And it essentially said, okay, plan A and plan B. So I can see on the hourly chart, that's an extension. Okay, that's an extension of this moving average. Okay. And you could say it could be the pivot point. Let's do that in a slightly different color. Could be this pivot point, or it could be the extension, of these moving averages. We also know that it is a moving average on a higher time frame on the 4-hour. But I'm trying to put it all onto this 1-hour chart. So we still have rationale for buying dips. Our concern is right here. That's our July target. Oh, you didn't have a July target? Oh, dude, seriously? Scary. Scary. Okay. Or wait, that's even just our weekly target. Sorry, my bad. That's just our weekly target. Yeah. So at the very least, if you're going to stay bullish, we're waiting for that moving average. And that was part of our analysis that Tradars has already pointed out for us. That's what this is saying. Down and then up. That's one of the 2 possibilities on this pattern. So down to the 21 and up, but not where the 21 is, where the 21's going to be. And you can try to cut corners. We have all the tools to cut corners. And you're like, okay, where should you be aiming if we're not going to trade the current 21 EMA, then let's trade the future 21 EMA. And I have a tool for that. Oh my God! Oh, guess we maybe should have bought that. Okay. Yeah. And boy, that. Hmm. All right. You're like, Wayne, I don't get it. What are you pointing? Okay. Well, let's delete some of this stuff. Huh? And indicators, get rid of some of these pivots. And the price action pivot points, we'll get rid of that. We'll get rid of that moving average. All right, you ready? We're right there, huh? Cool. Now it's right. There's the higher time frame. So if I were me, I would use this as a buy zone, and it's already occurred. Go back to the. Cool. So there's some chance. Now, Don Pablo brings up a point. You can overthink things, right? So I'm worried about those pivot points. Now that I deleted the weekly pivot points, I'm like, what pivot points? All I know is we're above the moving average buying dips. Cool. Yeah. So, yeah. Cool, right? So we had our CPI today, came out as expected, which is higher than the past. And it impacts things like expectations for monetary policy in the United States. So if you remind me, for those that are part of my my day trading group, we meet at 4 p.m. today. If you want to go through the Fed Watch tool and quantitate how things, how monetary policy expectations have changed based on what just occurred, make sure you ask, and I'll be happy to cover that. Okay, thank you for being part of tradars.com, radars for traders. Today we covered market sentiment, we covered real-time news, we covered some macro fundamentals, we did technicals on the major pair or major assets that you probably trade. We went through some common trading patterns. Pretty cool. So we have market sentiment, we have technical analysis, we have fundamental analysis, and we also have performance coaching, and it's all the same price. Everything for the same price. So I think if you should swing on by and give traders a try. Give yourself an edge. Remember, this is a competitive sport. So are you being competitive enough? Or are you doing this for fun? Well, maybe try Fortnite. This is Forex. This is a blood sport. All right, so peace on earth. May the pips be with you. May your profits be above average. Thank you to Traders Way for providing excellent execution. And I will see you later today. That just happened.